go here, go back here. Come on. Sorry, guys. I don't know what's going on with that. Let me try to pull that chart up on another window here. See if it came back. Doesn't want to come back. All right, let's pull up in another window here. Okay. So here's a prime example here of, where you could just trade with, a small capital money with the Elliott wave strategy and just be expecting that after this initial move right here, you catch the retracement of it, that you're at least going to get this much profit out of it. At least going to get that much profit out of it. Simple as that. The impulsive move happens. You don't chase it. You wait for the retracement of it. You get you get planted there on that number 2 spot of the Elliott wave formation. And then you're at least expecting a move similar to this one in value. This one went about 80, 90%. Okay, so you're at least expecting to get, well, the percentages are going to change as the price changes. So I always just measure the move like this. We'll say, okay, this one went about that much. This next one from where it holds the retracement right here should at least go that much. And wave 3 is usually a little bit longer. So it went a little bit longer. Got a little bit more value out of it. Okay? This wave 4 is going to come down. It's going to test this wave 1 height. So when you see this thing selling down, a good buy zone would be right here at the top of this wave 1 height, right in here, right there. And it got tagged again right here. Okay, even though that this little wick exceeded the trend right here, it really didn't do anything else. It didn't really open and close out of that zone. Now looking at the open and close price, we might actually see this thing bleed down to this line a little bit more and kind of make people unsure if it's going to continue. But chances are that this thing will most likely continue because it seems to me like it's lacking its last impulsive wave here. We got this 1, we got a 2, we got a 3, a 4 that challenged the top of wave 1. We're relatively respecting this trend. So if you bought here, you're still kind of at a good place where you could, if you buy this sell-off, everybody else is fear and they're lost, and you're expecting it to challenge this wave 1 height, then you got a really nice little buy zone here because you're buying right here and you're still in profit right here. Even though it's just a little bit up, you're still in profit where you can have a break-even stop that might have got you right here. This little this is where you sometimes got to take the trade a couple times because if you buy here and you put a stop at break even, depending on where you bought, this little wick right here could have stopped you out of break even. Okay, and then you got to say, okay, should I take the trade again? Should I take the trade again? That's where you got to try to say, really, really weigh it. Look at other factors, and say, do I think this thing's going to get another 5th leg out of it? How does it look on our time frames? Is it strong? Is it trending up still on a bigger picture? Okay, like our daily seems like it's still up here, We're going to talk about this stochastic RSI and all these oscillating indicators, but I try to keep my trading strategy really simple, guys, really simple, because all this whole list of stuff on here, I swear it is here to confuse you. Okay, all of this stuff. I hardly use any of it. Okay, hardly use any of it. I will mostly use exponential moving average, stochastic RSI, sometimes the median average, convergence and divergence, which is basically just another oscillation of strength like the RSI. And sometimes the Bollinger Bands, sometimes, when I want to see, how moves are unfolding and going to break. But this seems to be painting itself very beautifully here, like an Elliott wave, okay? And this is where you would want, you don't want to buy this thing on its impulsive side, okay? This is where we want to understand how to become the 10% of people who are going to make money out of this move. Because anybody who chased this move here lost money on it. Anybody who chased this move past this point right here lost money on it. But there's a lot of money to be made in this move by understanding how it's going to flow. I mean, this thing is still up 100% after going 100 160, 170%. Okay, so there's a lot of money to be made on this expansion in price, but you have to understand how to play it. You can't play it like the herd. You can't come in and say, oh shit, this thing's breaking out, let me chase it. Okay, because you can almost separate right here. As soon as this volume came in right here, boom, and everybody chased that, boom, right back to where it went, 100%. Anybody who chased this break right here now is at a loss or a break even. But that's where we want to buy. We don't want to chase the break. We want to let the market do what it's going to do. Buy the retracement. Buy the retracement. Buy it when everybody else gets shook out and they don't want it, because we understand there's a larger picture unfolding. Okay? Most of the time, when the market wants to make new impulses in price, a new run up in price, it almost always makes it in Elliott wave fashion. Okay, we're always looking for some sort of impulse, retrace, impulse, retrace, impulse. Okay, there's a lot of traders that recognize that, but they don't subscribe to the Elliott wave theory. I heard another guy talking about it that has, he's pretty popular in Bitcoin trading and stuff like that. But he was mentioning, how things make three impulsive sets up, 3 legs up like this, and then after that they get a deep retracement. Well, that's true. He's speaking of Elliott wave theory without even really understanding that he's speaking of Elliott wave theory. So we're expecting the market to make these impulses up, these 3 impulses up and expansions in price. Okay, here we have 1, here we have 2, and now we're looking for that 3rd expansion in price up. Okay, but we don't want to get it when it's expanding in price up. We don't want to be the ones that chase it on the way up, because every single place that it got chased, okay, we're going to separate them out with a yellow line here. Okay, right here on this first impulsive move, right here. If you bought past the yellow line and chased it, you're done. Okay, that's where you want to buy. You want to buy when nobody else wants it. You want to buy the fear. You want to buy the retracement. Don't chase it, retrace it. Okay, like don't not chase it, get the retracement on it. Okay, same way. So now anybody that bought the breakout right here and said, anybody who watched this thing, basically, let's get rid of our buy zone here. Anybody who watched this thing and said, and didn't buy the retracement here, and kind of said, oh, it seems like it held a good retracement, and right here it broke out and it's making a new high, because here was the high and now it broke out and it's making new highs. So let's buy this thing. It's making a new high. You're in profit for a little bit, but if you don't take profit and understand the relative length of that wave in relation to the first one, if you don't take your profit, price comes right back down. Again, everybody who bought the break and chased this thing beyond this point, right back, lost money. Again, what do? We buy that point. We want this point. We want this point, expecting it to challenge this wave one, expecting it to spit out all these retail traders that bought the break. Okay, this Elliott wave theory really goes hand in hand with the market psychology of loss. Okay, like it took me a really long time to realize that. And I had seen this picture floating around the internet for years, but I didn't really tune into it and realize that I was trading from these emotions without even realizing it. I mean, think about the things that we do every day in our life that we're so accustomed to doing that we don't even think about doing them. All right, like we will follow the emotions of the herd if we do not stop ourselves from thinking about it. Okay, we will fall prey to this cycle if we do not recognize it. All right, so that's really important. Like, it's one thing to see this and say, oh yeah, but you really have to focus on it and say, why are people losing here? Okay, people are losing here because they're getting optimistic and the belief and the thrill and the euphoria, all these things are coming, but these people aren't understanding the market cycle. They're not understanding how they're getting set up to lose when this comes down. All right, only the people, if this is going to be a bullish market and hold a good retracement, only the people who got into this belief or the hope are still in profit when this thing comes crashing down and holds a retracement. Now, this example, the thing retraced all the way down. But in a bullish market, we'll go through all these emotions and then hold a retracement, maybe about here at denial, kind of stage, and it will hold a retracement of this entire move and then continue on. But we want to understand all these emotions and not get caught in them, because you will trade from this emotional standpoint without even realize you're doing it. Honestly, without even realize you're doing it. So you really need to say, wait a minute, where are we at in the cycle here? I don't want to be one of those people that start to say, wow, okay, this thing's great. Man, now I'm going to tell everybody else to buy this thing now. Oh, wait, start to get that euphoric feeling. As soon as you get that euphoric feeling, guys, and your account is up, press the sell button. Simple as that. Press the sell button. Because that euphoric feeling that feeling of euphoria is there to tell you a reason that, most people, when they feel that euphoric feeling, it comes right back the next day with, oh shit, why didn't I take profit? All right. So trust me, you do not want to get caught up in those emotions. And so same way, this thing looks like it's kind of looking like it wants to do something here on another leg up. So same way, we want to understand the flow of the market and understand where to not buy the market. Okay, like we see it breaking out, worried about here where it broke out, we see this volume come in and everybody's like, okay, great. If you're going to buy it, take profit right away. Fade the break, fade the breakout basically, where you sell into the breakout. All right, like I wouldn't take a short position against a bull market, but you have to understand that first breakout move will get faded and it will sell down. I mean, we see it on Zcash, we see it on, almost everything. Nothing really breaks out and then just continues up. Maybe Sia coin is starting to continue up because it has a larger kind of wave set that's unfolding. It has to hold above 50. But like stuff like this, when it breaks out, we don't want to chase it. Just let the market do what it's going to do. Yeah, sure. If you get in right here, it's a better entry for the longer picture than buying right, here. Sure. But who's really buying this breakout and expecting a whole 5-wave Elliott set to come out of it? Not many people, it's hard to be, you have to almost be watching a market to catch the breakout move. Okay, not many of us are just sitting around watching markets. Every now and then you flip through the charts and you see something like this breaking out. Sure. Like I traded Zcash on Sunday morning. When I saw it break in 50, I bought at 56 and I sold it right at 100 into that push. Okay, understanding that is not going to maintain. So you can make money if you see it breaking, but that's only because I saw it breaking out. But you want to get a quick flip off of that. You want to basically buy here and be prepared. As soon as you start to see those red candles start to come, sell, and then get right back in on the retracement. So if you're going to buy the break, flip it quick, because if you buy the break too fast, you're sitting here at break even. So if you're going to buy the break, flip it quick. All right, get back in on this